we go. All right, we're going live and sharing screen and doing this quickly as possible. All right, we're going to start with the trades. We start with our morning routine. Right, you check up. Big reports came out yesterday. Today is not that many reports. Big earnings are happening today. I kind of remember. I don't remember which ones, but Micron is big in the AI game. General Mills, that's all your sugar, cereals and all that stuff. Uh, yeah, those are the big ones. That stuff is more pertinent when you're doing day, but when I'm able to be here all day, um, not something I can do right now. And now my computer is going slow. Come on, man. I've got to go. All right, there's my pre-market stuff. Just looks like it was going up all night. Look at that. Everything's green. And then Asia was down. Then it seems like it must have rebounded. All right. God bless it. Patience. Patience is a virtue, and you practice it. That's not how much time I got. I have less time than that. Okay. Um, Restock screeners. Yeah, I don't need to do that stuff. So, all right, I'm gonna just go on up. Take a look at my charts. I'm gonna start using the trading view chart because I can't just click go and trade. I have to like work it out beforehand, and it will let me see if my trade I even hit before I go on. Because I have not. I'm like training myself not to be looking at my score, like not obsessing over it. I either trade or you know. And since this was the trade that I had set up, I'm trying to see where was I yesterday morning. That's Tuesday. Monday. This is Tuesday. No. Oh, there's more. There's more after hours and pre-market than there is actual market with the 23-hour thing. That's what's throwing me off. So this is the day I placed my trade here, thinking that it might drop all the way down. It did not drop down. The best it ever did really was come back to this spot and then took off right after I left. So it just went up instead of dipping down first. But that move, we can see, right? Like, let's just look at this move. That move, if I had been able to catch it, right, would have looked like if I had been able to catch it down here, right? If that is the move. See that? From here to here. Ah, see, I'm getting distracted. Here's the move, and the question is if I had done, I would have easily gotten Well, I would have gotten more than that, so it would have been great if it had gone down. It didn't. So now we'll just go back to doing our regular routine. And we're doing for the day. Now, one difference is on here, I can have trades that stay over. Like I can make a trade and just wait for it. If I leave that there in 2 weeks, if it goes up and then comes back down there, it'll catch that trade in 2 weeks. That's not something I would necessarily do. I'm just saying that sometimes you can, like with stocks, you can go like, okay, if it ever gets down to $77, then I will buy it, and it just sits there, waiting until the price comes down there. All right, daily, previous day's high or low rather was here. Previous day high is here. So we've already, and I want to see when that happened. I may need to start trading a little bit at night because that day and previous day, see here, overnight, it came up, touched that previous day's high, and then we'll start moving towards the low. And you could catch that move if you were in. That's what kind of what I did when I was able to come in after work. Um, but there's no after work when you get home at 10 o'clock or 8:30. I'm just tired and I never came down here. Uh, hmm. Yeah, you can see it too. It touched it overnight and then worked its way down. The 3 o'clock hour stopped the fall again, just like did that happen last night? Yeah. Monday 2 a.m. stops the rise and then turns around in the morning, drops down. Tuesday morning, the drop stopped and the reversal happened. So there's this turnaround at 3 a.m. That's the other thing was getting up early. I used to get up at 3:30, 4 o'clock, but again, working 12 hours is making that not happen. So I'm not going to complain about it. I'm just going to adapt a little bit, and that's what I'm doing. I'm only doing the set and forgets. I'm not trying to catch it because I don't have time. Because I'm already out of time. Yeah. I only got 7 minutes left now. All right. And I'm thinking I just don't see a trade because here we are in the middle. It's 3:15 p.m. 1:15. There was a turnaround that has never. I feel like I identified that. This is a 15-minute chart. I feel like I looked at this space right here. Did I look at it on this side? Sometimes you think you see patterns that you don't really see. And the reason I was thinking, yeah, it's right there. I thought I looked at that yesterday, but I guess I didn't. No, because that's after I left, 6:45. So yeah, that's fine. But there was this. period. Like things were like, we're going, we're going, we're going. Wait a minute, there's some pushback here. We're not moving so fast. Then we took off and started going again. Here in this area, there was a stop, right? And you can see that, right? And as you can see that, and we'll just identify it from the base. What we generally call our base is the top closing price and the bottom low point for the above and whatever. The opposite when you're looking above yourself. But you see it just touched there and bounced back. That was all pre-market. And once the market took open, it just went ahead and went off, but it came back to it again. This is a critical time because that 10 to 11 o'clock hour, I got to get my times right, but somewhere in there is where that's where London is closing. They open 3 o'clock for us, they close 8 hours later, 10 or 11, and there's often a change of character because now that money's closed down and just a what they call it 10 o'clock reversal, like it just boom and changes. It's not absolute every time, but look at it, boom, and then it reverses. 9:45, 10 o'clock, it turns around. See that? It's coming down, 10 o'clock, moves up. Coming down, 10 o'clock, moves up. Going up, 10 o'clock, reverses. Coming back down. And here we are today. Again, that's something that's more valuable when you can be watching the day, seeing how it's going, and expect some kind of reaction at that time frame. Now I'm asking myself, is that still, what does that look like in an hour? Because it's really a 15-minute. Okay, so it's not there in an hour. In an hour, it comes all the way down here. And that may be the trade. This is gold. I think I still like that. Because it moved. There was volume there. Not as much as in here. This is volume in thousands. It's just a visual representation of the volume, the number of people actually trading, and you can see it kind of goes up. Buyers really came in right there. I mean, that's where they started, and then it just took off. It held. Let me see what that looks like. Oh, here, I can just do this way. And it's set up. Well, I'm not gonna. Oh, that's weird. It just canceled it. Which I was getting ready to move it, but I did it right because I was setting up to do it. All right, so I'm gonna sell 4324. Show me that line right there. And if I go down here, it's 81. Okay, that fits my risk. It's micro here. Times 4 is 220. Or 3. That's 1 to 3. So you'd be looking to come here and go back up again. There is volume there. It's the morning time. In the opening money, sent it up. Came back into it. Continued on up. Yeah, I think that's the one. Yes, without real-time data. Okay. So I think that's the trade. 434. Where am I again? This is today's trade. 4346.1 is going to be my entry. I'm going 4347. Point one is my exit out of there. And 4347. No, that's a TP. Ah, Lord, I am already. She's gonna call me soon. 4315 is my stop loss, and then I'm gonna go here and do that. I'm gonna put more of that 4346.1. Got a 1 in 300 on it. So, it's a limit. 4346. Oh, it's there. No, it was not supposed to order that there. It was not supposed to order until there. Oh, shit. Oh, okay. I am lucky enough to be able to get out of this in profit if I wait 2 seconds. That's asking for nothing but upward movement from here on out, because that's another hour and a half. That's not allowing it to drop back to the area that I identified, which was down freaking here. No, 4346 right here. Oh, I'm on a different chart. On a 15-minute chart. This was the area that I was looking at yesterday. Okay. Oh crap, now I'm in it. There she is. Yes, dear, I'm coming. Do you need my help, or you just keeping me on track? Okay, I appreciate you. I'm heading up out of here. All right. Gonna have to leave that where it is, and do what we are actually doing, which I should have started there, but we're looking here. I'm going to just look at our trade. It's not going to do a whole lot with it because it is what it is. This is where we came in. Remember, we went over this yesterday. Because we bought it at 103, but we took that $2.09. Our actual price that we entered in is 101.07. The current price 102.54, which is under where they're going to buy it from us for 103, right? Where the price has to be for them to actually take it. So at this point, we don't know. I mean, if we have the spike that is possible, because remember, it likes to fill gaps. If we have that spike that's possible, then what will happen is we'll lose the stock and just walk away with the profit. If we don't, if we have the stock next week, we'll go over and we'll look at the trade grid and see, like today or next week rather, if we can get another $1.45 on that one would be good, because right now the cost of our deal is $2.15, Remember that we got it for, or sold it, right, for 209. Yeah. So the value of that particular contract has gone up a little bit because the price hasn't moved a whole lot. So as the price moves up, the value of that contract will go up and will be cheaper to buy back. So like right now, I just want to get out of the deal. I can give you 215. You gave me 209. I gave you 215, and we just walk away. Good. I bought the contract back. I'm not going to do that. I could do that in what's called a roll. And the rationale or the reason for doing something like that would be if we were at the end of the week and we just wanted to buy that back rather than wait for it, I could do, and I won't look at this until later in the week, like Friday maybe, when, because the time decay, because the contract is only good until Friday. So even if the person has it, if the price is like 102.99, that's almost 103, it's still not going to be worth that much because there's no way it's going to make the value that he needs to get it, right? So the time is just, it's going down. So there's two things happening. Um, but yeah, what we'll do is look at next week to roll it over. Right now we're good. Looks like we're not gonna. We don't know rather if we're gonna get the stock taken from us, or if we'll rinse and repeat the premium. And that's that on that one. And I'm gonna look at Webull just because, but it has not moved anywhere close to where I needed to. Currently 863. So just awaiting, waiting for a return to higher days, or a start to higher days, because this was actually a trade that I took with a thought process of it was added to, it became a public company this year, which is why you had this big spike where it went from nothing to almost $70. Yeah, and then it dropped back down, which is something that stocks often do. They go up and then they come down, and then diddly 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 before they take off. And I thought I was witnessing the takeoff earlier. Did not back in October. Yeah, didn't do that. It just kept diddling right here. So we're just waiting. This is what they call consolidation phase. I'm not concerned. I'm just waiting for my money to return the investment. I will have to use other money to do other trades until then. And so we'll just keep doing that. And I'm going to go to work to make money to pay the bills. Have a good day.